Hey guys, welcome back. It's June 15th, Wednesday. Finally got PAL. You can see it there with the crazy volatility in the SPY. It actually moved more than GME today. More volatile than GME. Sub up, like up, comment down. Happy money sticks around. We're going to talk a little bit about what PAL said briefly. You can follow us on Twitter at HappyMoneyYT. And we have Discord server too. Welcome to join that. Link for that's in the description. We've been kind of in a holding pattern until Powell spoke today and before the FOMC released their minutes. And yeah, 75 basis points. So that was actually getting priced in just basically a day or two before his meeting today. So expectations were 50 basis points, I think, on Monday. And now by yesterday, like midday, it was like 95% in the Fed futures saying they're pricing in a 75 basis point rate hike. So he comes out today and he says 75 basis point rate hike. So it's been priced in. Now that the market knows what's happening, the uncertainty is out of the market. I think, as well as a 75 basis point rate hike, which I think is good. I think we need to raise interest rates, but that's kind of a different topic. At any rate, the market now knows what's going on, more or less. So I think it can rally. And I think if it was maybe even 50 basis points, it would be unsettling because they would not have control on inflation. And if he did more, it would just maybe shock the market a little bit. I think if he did 100 basis points, it would be pretty aggressive. I think it'd be fine, but I think the market would just probably take it bad. I think 75 basis points, I think that's prime candidate for a rally. We were already seeing it on SPY, this little head and shoulders. We have a head here, shoulder here, shoulder here. We were seeing it before today, given there's external factors, but without it, we were already setting up for a bit of at least a dead cat bounce, if not a bear market rally. MACD cross bullish on our hourly time frame here. We've got green over the 9. So yeah, my bullish plays on SPY working out a little sketchy to hold them through the FOMC. I mean, it was a bit of a roll the dice a bit. Typically, once news comes out that's anticipated, the market likes it that it's just out and it's not an unknown at that point. So oftentimes it'll cause a rally. I'm not sure what Powell could say that wouldn't cause a bit of a rally. So we'll see how long it lasts. If you line it up with like GME TA and expecting GME to rally the next 2-3 weeks, say, then yeah, I think looking at GME as a leading indicator, I think the SPY will probably have something like this going on. As you see, GME's had its rallies this year basically only during bear market rallies. So whether it was with swaps, futures, cycles, rollovers, whatever, that's great. But our big rallies have been during bear market rallies. So big one here, bear market rally, pretty big one here, bear market rally, little one here, but still. So that's what we're looking for, I think, at this point. That said, I think we are still deviating, kind of spreading this wedge from SPY. We're moving with it, but higher highs and higher lows from basically what SPY is doing. So SPY gets some big ups here. GME is going to get bigger ups, just like it did here. And that will basically change or keep GME's trend more bullish than the markets, because the market's been down. So let's look at SPY here real quick. Big move, big volatility. A lot of volume came in. So I definitely see some of these gaps getting filled, probably all the way back up to that 400. Unless if they analyze it more and there's like, oh, he's really saying this. Initial first reactions, I think at this point, are probably going to cause a bit of money to flow in and to see a bit of a rally. And I could see this gap getting filled up here at 400. So I should probably buy some SPY calls, actually. I'll probably get those before close. But you honestly don't even have to play SPY on the upside because GME is so much more volatile on the upside. So now the timing is a little unknown. Next, let's see, Friday is huge options expiration. I think like trillions of dollars basically expiring. And then T+2 from that will be Thursday. And then Wednesday, Thursday, or Thursday, Friday. Wednesday, Thursday's SLD period next week. Monday's closed. This rip right here was during SLD. And we have a lot more FTDs and whatever rebalancing rolling over happening this next SLD. So maybe, yeah, sometimes the market, so I'm thinking GME will rally a little after the market, And that's actually happened. I think it happened on this time. Let's see, 317. Yeah. So SPY actually front ran it a little bit. And so remember how I was saying, if you watched my other video, on this rally at least, you could see SPY was already looking bullish on the daily. Green MACD, green over the 9 moving average. And you could have literally got plays on GME for that. And I think we might actually end up seeing that again. I think GME could kind of keep rallying, but maybe kind of settle back down towards max pain 125 by Friday. We'll see though. It might have a big move up before then, or pretty big up to 140 resistance or so. But I'm thinking SPY probably will front run this move a little bit. It's hard to say though, because honestly, GME right now it never went bearish. SPY went bearish in the daily. We've got big cap downs. We've got red into the 9. This thing just basically turned into a big bull flag with just a wide range of consolidation. Yesterday with that engulfing candle that we picked up, it's held support here nicely. This 115. The volumes actually stayed pretty high, which is very bullish on GME when you have volume. When they shut the volume off, they just allow it to dump. So the volume, I mean, it's not crazy, but it's stayed relatively elevated, basically. So we might not get much of a downside, I don't know, in the next few days before we start getting big 20, 30, 40% days. Price targets on the upside, I'm hopeful for another 200, maybe higher, maybe 250. And if we get anywhere near those levels, I think RC is going to announce stock split, and going to give them however much time till it happens. And whether naked shorts have to close in that period, time will tell. Don't want covered calls, don't want short positions. Rolling up, trying to exit and just get as much long as I can. It's been weird though, because it's like some of this down is like, well, this is kind of crazy, but it never actually allowed it to flip bearish on that MACD, even with all these huge basically market crash on SPY. So kind of wild. I have to actually look at SPY a little bit because my plays I should be good. Yeah. So anyways, I'm basically getting July 1, which is Friday, and then July 8, that Friday, getting exposure for those dates. Mostly spreads, nothing just long calls yet. We'll see. Need SPY above 376 by close. Seems like, oh, it's so easy, but could still be some volatility in the market for sure, as you can see right here. Yeah, so a lot of stuff could rally in this next few days, weeks. I mean, who knows how long this rally will last. A lot of charts look similar to this, I noticed, with this divergence on the RSI. And then we've got bullish MACD on, this is Confluent. Bullish MACD, green over the 9. Uber looks like this also, which is kind of a bottom that looks like it's reversing. So I actually got some calls on Uber also. Redbox, I actually did average into some Redbox for next week now. Looks like it's kind of holding up nice. My ones for this week are probably trash, but I got some for next week. It's got this engulfing candle in the hourly, kind of just holding support here at 950, which is nice. And on the longer time frames, it really just looks like it's kind of consolidating this higher level. So have to see how that goes. I got some calls in Revlon. There's warrants that are expiring or something. I don't know. I was reading about it on Wall Street Bets, I think. It's a speculative play. Free float 7 million. That's part of the play there. A lot of volume came in. Basically big bounce off this huge low. Green over the 9, liking it. So I just got some weeklies, the 2.5 strike. And if it has some retail sentiment, I think it could go wild pretty easily. SPY's come down here. So yeah. Yesterday, the hourly on GME, or kind of our resistance why I exited my longs, some of them, just the weeklies. I just exited the weeklies because we're kind of hitting this resistance. Now today we're breaking through it and kind of coming up to this next resistance. This rally, I mean, depends on the market, but I think it could definitely last another day, maybe settle down on Friday. But I see a price maybe 140, 136 ish before it kind of comes down. Might see that high tomorrow, maybe on Friday. Probably try and have it come down before Friday. So if it does get up there Friday, it'll sell off into close, or get up there tomorrow and just Friday will come down. And we could probably expect that with the whole market. Nice. My SPY position filled. So this was $500 call credit spread, or put credit spread on SPY, which expired today. And then my SPX from yesterday, I actually rolled over because it was going to expire in the money as a put credit spread. So I rolled it over till tomorrow. 373, so 373, 374, basically. You can just look at SPY. So it's pretty far out of the money now. I'll probably be safe. 373, 37, so it's gotta be safe above 370, 374. So I'll be safe on that. I'll probably get even a little more exposure just to SPY. Maybe on this little sell-off here to the upside. I think there's gonna be a bit of a rally from that. We'll see though. Sometimes the initial reaction is not always right. How long that plays out, I don't know. This was kind of the first initial reactions dump, and then the main thing that made it rally, so once he started speaking, was him talking about the next meeting and continue on with this path. He says he doesn't expect necessarily to do another 75 basis point hike. He says next time probably be 50. So I think the market definitely really liked that, and I think that was part of the reason for this rally, thinking that this is probably the highest rate hike increase, and then next time hopefully inflation is lower and he will do a smaller increase, but needs to keep increasing it until he wants to get back down to 2%. He did say to the last question, the housing market needs a reset. So you probably see some headlines for that. It was kind of off cuff and it wasn't like quite said like that, but that is what he said. He's like, the housing market kind of needs a reset and people need to get back to normal supply and demand. And it's like, did you just say a housing market reset? Here we go. Let me show you guys options. So here's the rep calls. Oh, I got a lot of them for 250s. I guess I average into them. I got 4 of those. Those are weeklies. Those are sketchy. If those have a little bump in the morning, I'll get out of those. I averaged into 150 or no, this is a new one, 155 200 call. This is for July monthly, or no, July 8th. That's next Friday. So July 8th. That's for like a $200 price target. By then on GME. Redbox, I got one more 13 call for next Friday. Here's my two Uber 25 call, or is it 25? Yeah, 25 calls for July 15th. And then here's another spread open. I averaged up into this one. It was up like 50%. Averaged up into it. 150, 175 call debit spread for July 1. Here's that put credit spread on SPY that just closed. It's fun to have those plays, those SPY credit spreads, but especially when you read the TA and you're right, it's more fun to be right than necessarily, I mean, making money of course is good, but to do a play that you're predicting and then it's right is it's a great feeling. And on that play, I wasn't necessarily predicting a play and being right. That was a bit of a roll of the dice. So I'm happy I'm out of that one actually, just with the gains. Uber plays up a little bit. Yeah, so what's nice about this bounce that I think we're going to get potentially, or at least even today, is these short plays that you want to get into. You're going to get a nice buy-in, maybe some today, maybe in a week, I'm not sure, but you start scaling in. DRV is one of them. This is a real estate bear 3 times ETF. So this was actually made in 2008, of course. A lot of different ETFs made in 2008 to basically short the housing market, or mortgage-backed securities or whatever. 2009, I guess, rather. But so all these lines here, why it's so high is because this reverse splits. It's a decaying inverse ETF. That's how these work. So don't go back and think, oh, so things at like $50,000 is great. No, it wasn't quite like that. What I look at to see kind of, you can't see it here because you can't see 2008, but I like to just see basically how big the moves are. This gives you a better idea. So 10,500 up to 20,800. That's just too big of numbers. I don't want to look at that. So we haven't had a housing market crash like since 08, but even there's different times when, there's volatility and stuff. So this went to 500 up to 780. So that doubled, and that was just in 2017. Maybe the repo crisis stuff going on there, I'm not sure. Here's a pretty big bump on this one. So 200 to 700, 246. It's over 3 times on that one, and that was just, that was COVID, okay. But that was just COVID. That had nothing to do with real estate necessarily, and at 3x. So it's kind of a good, I guess you could just get it as like a kind of a bear play. But I think specifically the housing market, this could 3x or 5x from where it's at. So just depends on time frame. Might do options, might do shares. I don't know. There's so many different ones. Thing with these is that they decay, so it kind of sucks. Thanks guys for watching. We'll see you on Discord. Peace out.